Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back Jeremy Yea, Senior Valuations Editor at CAP HPI, who's joining us for his roundup of how trade values performed in March and over Q1. And just to provide some context to our chat, when we last spoke to Jeremy a month ago, he reported that February showed further signs of a return to seasonal normality following several months of stability for trade values last year. So we're about to find out if that continued into March. So welcome back to the pod, Jeremy.
Morning, Curtis. Yeah, thanks for having me again.
Good. It's great to have you back on, and can't believe we're at the end of Q1 already, and we're talking about the March results.
Oof, yeah, every month feels like a week for me at the minute. So, yeah, another month's gone by and a quarter, and we're already looking at Easter, which seems crazy.
Yeah, definitely. So, I mean, as always, let's start off, let's start off with the headline trade value number, that 3-year 60 point, which we know is zero, but let's have a look how that compares with previous Marches and a bit of the detail behind it.
Yeah, sure. So, yeah, as you said, it's ended up flat overall, which is a really good. I think it really, highlights and backdrops a really stable market overall. It didn't actually move for the entire month, so we finished our deadline in February, the last few days of February, moving into the new our new month, sort of 3-4 days before the end of the actual month. And it was at zero, and it's stuck at zero. It was welded to zero all the way through. So I think that really highlights the stability for the entire month. And that's against a seasonal drop of 0.2 since we started Cap Live back in 2012. So, yeah, it is on the stronger side of what we normally see. I think if you put that into some sort of context away from the seasonal average, if you look at last year, last March into Cap Live values from March into April monthly, it dropped 0.1. In 2023, it's actually slightly went up about 0.5%. But I think it's more interesting when you look back to pre-COVID in terms of sort of normal seasonality. It is either side of either just behind a 0% move or just ahead of a 0% move. So, yeah, I think it falls more in line more with familiar or more seasonal activity and results, which I think is really good for the market.
And I guess, thinking about, we're talking, just saying that at the end of the first quarter, at the end of March now, and obviously we'll eagerly be waiting what the new car registrations look like for March. But what about how does this first quarter look? What's your feeling around this first quarter, and what does the numbers look like for this first quarter of the year?
So the first quarter for this year is increased by, this is plate uplifts excluded, so not the January plate uplift and not the March plate uplift, so just raw movements, if you like. It went up 0.3 overall, according to the first 3 months of the year, which again really provides that stability in the market. And what I feel I've been repetitively talking about stability. And we've run out of words to, I guess, describe a stable market, to be honest, but that's exactly what it's been. Again, put that into context, last year went up 0.5% over the first quarter, which again is obviously quite a strong year, but that was off the back of a relatively good 2023. 2023, so the beginning of 2023, that went up 1.6%. Previous to that, and obviously we've had those COVID affected years, we have had some over 2%, even almost 3% back in 2021. So and it's if you go back to 2019, what we would consider, we're benchmarking to a more normal year, that went down 2.2%. So I think there's case in point in terms of, look, pre-COVID, 19 was over 2% drop, and now we're state of inflation for the first quarter, but driven by lack of volume and desirability and what have you.
And Jeremy, with all this stability, as you've highlighted, did you identify any trends across age and mileage profiles?
Yeah, so 1 year 10K, it did drop ever so slightly. It dropped down 0.3%. At 5 years, it actually slightly increased 0.2%, and at 10 year, it dropped ever so slightly. So we're not sort of seeing the strength as we did in the last couple of months in terms of some of the older product that seems to have just eased off a little bit. I think it's just interesting when you look at maybe some of the detail within it across some of the sectors as well. Most of the mainstream sectors increased. I think the biggest drop we can see here is MPV. That dropped 1.5% overall, and followed by large executive. So quite niche now, I would say, in terms of some of the volumes for some of those vehicles coming in. But overall, coupe cabriolets went up a couple of percent, convertibles nearly 2% as well. But with the mainstream sectors just on the other side of the flat movement, so just a small increase. So yeah, really quite a good month.
Yeah, and bearing in mind it was the plate change month as well. Was it a tough month for nearly new cars competing against those new 25 plates?
Yeah, I think it's quite mixed. I think when you look at in some of those nearly new vehicles in the market, unless we'll talk about BEVs, it's the topic of conversation whenever we speak to any of our clients and some of our OEM partners and what have you. But yeah, I think it's really interesting when you look at some of the detail within that. Nearly new cars, I guess, as a used offering can look expensive compared to a new offering at the minute, and I think that's probably magnified somewhat when you look at some of the BEVs against ICE. It's definitely very competitive out there, and you can see the push, maybe slightly more push as well because of the new VED changes or the expensive car tax changes coming from the 1st of April. So I think it'd be interesting to see what happens from now until we get to the 31st of March. And I think the 31st of March could be quite a busy day in terms of, registering cars which are on the ground.
So, I mean, sticking with fuel types, I concur. We're going to be a busy end of the month, I suspect, for dealers this year and, end of March. But, sticking with fuel types, once again, I mean, BEVs remains a key discussion point across the sector, especially as wholesale volumes continue to rise. How did this perform over the course of March and the first quarter, Jeremy?
So we've had another reduction for battery electric vehicles for the month of March for April monthly. It dropped 1.7%. It dropped 1.6% last month. So about £320 this month, £340 the month before. So they are still in a state of deflation at 3 years, and even at the younger points, 1 year is going down as well, 1.6%. It's very mixed when you look at some of the models within it, and as you rightly pointed out, we see much higher disposal volumes into the business. So trade sales data into what we see, month on month records now, and that's been rising since the back end of last year. And I think that's having an effect on the whole market as well as some of the individual models within it. So I guess it depends where they sit in their life cycle, but it's definitely one to watch, and it's a topic of conversation. You're right, it's what everybody wants to talk to us about. Certainly challenge us at certain points as well, about what we're seeing. So it's fascinating to go through, and it really is detailed. I know we say it each and every time, but there is a lot of detail behind it. Really is.
I mean, talking of that, I mean, what BEV model, and we talk, because I think, in our conversations, it is particular, the BEV market is a smaller market in terms of the used vehicle park, in terms of volume in the marketplace, fewer models compared to, ICE vehicles in general. But, is there sort of winners and losers? Because there is probably bigger winners and losers in that market, that sector at the minute.
Yeah, I think we've noticed some heavy drops for some. So Polestar 3, that went down 10%, or £4,000 very early in its life cycle. Starting to see some evidence come through for that now. Mini Cooper EV, another 6% in a month, or £600. That car looks really, really good value. But there's an awful lot of volume we see coming through our trade data feeds and playing to pick up within retail as well. And Jaguar I-Pace came down. That was over 4%, or £850. Not everything went down though. There's some wins within now, I would say. Honda E was flat, same as 500e, Cooper Born and E2 Peugeot to E208. So, but they're vehicles which have gone down probably considerably in previous months, to be fair. Some small increases for some vehicles. Polestar 2, that went up about £300 or 1.5%, just over. Volvo C40E, that went up 1.9%, and XC40 as well, that went up 3.5%, or nearly £700. So there's the detail in terms of that, and that's just pulling out just a couple of models. So yeah, there's plenty of details behind it for sure.
Yeah, for definitely. I say these extreme movements, but very much, driving the overall average. Yeah. Because of the fewer models within that sector. And I suppose, talking about petrol and diesel, everybody's on about, obviously, the shortage of supply comes to the market, particularly in the ICE vehicle sector, will drive up values. What's happening in that petrol and diesel sector at the minute?
So diesel was flat for the month. I think it showed a small increase for a bit and probably eased back ever so slightly, so ended up flat, but which is still a really, really good result for diesel. And think about the demonisation of diesel and what's not been created or been manufactured in the last few years. So there's still a big call for diesel. Petrol, well, that seems to be just going on and on. That was up 0.3, about 50 quid, so only marginal increase. Hybrid was the strongest, pure hybrid, non-plug-in. That was the strongest fuel type, going up by 0.4, about 70 quid. So yeah, there's some really strong performances within that, and like you say, there's not an awful lot of that up 3 years or even some of the older age points as well. So yeah, there's real desirability for that.
We're just starting to see that impact of the pandemic shortages now in that older profile of petrol, diesel, but particularly in that petrol market, interestingly.
Definitely, yeah. That's reduced significantly in terms of how we track previous years to where we are today, and there is that gap of 3 to 5 years, which is never coming back. There's 1.6 or whatever, 2.5, whatever the number is. There's lots of different ways of different numbers coming out, but those cars are missing. They're never going to come back, and I think they're can be deemed as probably easier to retail for some anyway, at least. So yeah.
Yeah, definitely. I fully can concur with that. Well, we'll be back shortly after this brief break with more data analysis from Cap HPI on March used car values.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Now, Jeremy, each month you analyse retail activity by days to sell. How did they perform in March compared to February?
More positively, days across the board reduced. So we saw an overall reduction across all the sellers, if you like, all the retailers, whether that's franchise, independent, and supermarkets. That reduced by 3 days overall, so from 42 to 39. So we've seen some good reductions there. If you look at it independently, so franchise, that reduced by 3 days again, from 36 to 33 days. Independents went from 52 to 49, so that reduced as well by 3 days. It's the supermarkets which have been selling them a little bit quickly, probably a bit more price aggressive in the market, maybe chasing the market a little bit and pushing volume out to consumers, and that dropped by 5 days from 36 to 31. So positive across the board for sure.
Yeah, definitely. And you also polled the views of the auction houses. What were they telling you about stock levels and demand over the course of the month?
Well, demand is remained the same or actually increased. In February, no one said that anything had decreased in terms of demand. If anything, demand was overwhelmingly increased, 77% versus 23. We said it was about the same. March slightly different. So 46% said it was about the same. 36% even saying it increased, with 18% saying it decreased. So it's a little bit more mixed in terms of some of the feedback we picked up from the auctions. So yeah, I think it's really strong in terms of overall demand. Is set to continue. In terms of stock levels, I think it's a bit more mixed in terms of who you talk to in terms of stock levels. But broadly, stock levels aren't where that you would probably expect them to be for this time in the month in March, which is hard to believe really in some cases. But I think it's creeping up now in terms of return volumes into the market. But it's certainly not like previous years or pre-COVID years anyway. So yeah, stock levels are increasing, but I think demand is still outweighing some of the stock levels anyway around, which is good.
And really getting your crystal ball out now, and we obviously giving Curtis the opportunity to refer back to what you say today on next month's call. But what about April? I mean, normally we do see in the last couple of years we've seen declines in sort of the April market going into May. I think last year it was down 1.5, year before it was down 1. What are you seeing now, and what do you expect as we see the impacts from the end of March, and we talked about some of that last minute activity in what we expect this week and the March part exchanges and things like this. What's your view as we move into the month of April now?
We believe it's going to be a drop. I think the big question mark is how much of a drop is it going to be? April, Easter's late. There's disruption now with obviously from the first week to the third week, and depends how the 2-week holiday overlaps in certain parts of the UK. Seasonal average movement's 1.6% down, so it fits in between the two previous years. So there's 1.5 last year drop and 1% in 2023. I think it could be anything in between those two figures, to be honest. I mean, I think on our short-term forecast, we're saying it's probably going to be, circa to a 1% drop. It might get to 1.5. It just depends on, I guess, retail activity and desire to buy. I think cars will probably be slightly cheaper. But again, it's going to be really detailed in terms of what's going to be slightly cheaper compared to whether that's drivetrain model, et cetera, based on volume coming into the market. So I think the market's still going to be good. But we're just going to see a seasonal drop, but it might not be as hard as the average seasonal drop, which is, again, just based on everything that we can see, today.
Yeah, no, I agree. I think Jeremy was trying to give himself a little bit of flexibility there, so you couldn't hold him too much definitely on the actual number.
I was making notes, Jeremy, so
could be this, could be that, could go to this, could go to that. Yeah.
It's good to be wrong, but I guess the right way around. So, it can be even stronger than 1%, so be it. But yeah, I think common sense and seasonality and
I think there's so much going on. Yeah, I think there's so much going on. I mean, just off at a tangent, we haven't had the consideration outcome from the ZEV mandate consultation. There's all the tariff conversations taking place, US and everything else. Yeah. So I think, at the minute there is so many variables playing into the market. It's a very difficult one to predict. But yeah, I think you've probably laid out enough options there for Curtis to think about for next month.
I don't envy our forecast team in such. It's such a crazy market in terms of what's going on at the other side of the pond and what have you, and even internally with government, and so interesting times for sure.
Yeah, no, I think you're right. I think we're in a it's fairly stable, I think, at the minute, and we'd say every time, and we used to say previously, the devil's in the detail, but I think very much so now, particularly in that EV sector, as you've highlighted there is definitely devil in the detail. You've got heavy discounts, heavy drops on some of the age profiles by certain models, and then other models have gone up within a different age profile because of some of the activities at that OEM level in their pricing or routes to market for their vehicles. So I think, again, anybody listening to this, obviously the editorial is now out in the market. You can access the editorial either through the CAP HPI website, which is cap-hpi.com, or find Jeremy, Chris Plum and others from CAP HPI that will be sharing it through their social channels. And as I say, very well written this month, because I think Curtis said it right at the start, a headline figure of zero movement. You sort of say, well, what have you got to write about? But there is a lot to write about in the editorial this month, isn't there?
Yeah, thank God. Thank God there's a lot going on underneath the surface, because I think if you look at a 0% movement or not, it looks like a mill pond on the top, but it really isn't.
Yeah, no, I do take my hat off to you guys at CAP HPI, because it is as full and detailed an account of the month as any month. And so well done to you guys. And Jeremy, many thanks for joining us this month.
No problem at all. Thank you for having me again. It's been a pleasure.
Yeah, do come back next month and we'll find out how April fared, and we'll compare it with your projections.
Let's hope we're right.
Yes, no, definitely. So many thanks for listening. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.